Here comes the top 3 secrets to better understanding price action. Guys, we have to understand exactly what we're looking at when it comes to price action trading. This is what we're going to talk about in this video. Declining momentum. Everybody wants to capture momentum. We're going to tell you why declining momentum is so important. We're going to identify false breakouts, one of the most frustrating parts of trading, being involved in a false breakout. And we're going to tell you as well why consolidations are so important to understanding price action. Let's kick things off, though, and get into this because it's an interesting topic here. Neil, lead the way. When we talk about understanding price action, what's the most important to you?
Yeah, look, obviously, everyone's going to be looking at charts, and then that's like your window to the market. Now, understand, of course, there's a level 2, and a lot of us will trade using the tape and the level 2. But, you know, the primary focus is going to be what you're reading in the chart, and then, you know, specifically what the candle bars are going to be telling you. And I always look, if we're trying to make money as momentum traders, then you want to make sure that you are buying at a good price low and then managing to get your profit out before the stock makes a reversal. So if we're talking about upward momentum, ideally you always want to be buying here and selling there and buying here and selling there. And look, that all seems well and good and easy to do if I look back in hindsight, but that's not what the market is going to provide you with. So let's imagine a scenario where you've come in. It's easy to see, you know, this stock, SNOA, was a runner from early in the pre-market. It made a $5.50 move into $9. But I want to talk about declining momentum and how you use that to your advantage, because that's going to be both an area for entry into what can be possible support. It's also going to be an area of exit for when you might want to take profit off. If you're going to be scalp trading, you're going to be defining those outs. So first things first, I mean, you've missed out on this move. It's already gone to the upside. And then you see it pull back. And if you're still bullish on the stock, you look at this rejection here at about 850. It pulls back, and it makes a low here at 750. And this is a very small wick. There's actually decent volume in the pre-market for this time of day. But what happens when it retests the high and pulls back in? You have 3 large candles. I mean, these are drastic downward moves. And then the last, it gets smaller and smaller. And that's declining momentum into what was already a dip buy, right? There was a dip buy at 750 that gave you a $1 move. And then you have that declining momentum right into the level above it. That's a good place to get in. Now, if I was short that, it would also be a reason to get out. And then if you use it for the upside, when you're in here long, well, when do I get out? Okay, well, you have a gradual move up, and then you have explosive movement, explosive, and then declining momentum again. Now, this isn't to say you have to jump out of it, but it ends up signaling a bit of a reversal. So this is what we mean. Now, in terms of buying in front of it, you want to have an established a level down here where there was a pullback, so you buy when the momentum declines. But when you're taking profit out, it just gives you a reason to maybe think about a trailing stop or take the shares out altogether. The same thing happens on this next movement into the upside here. So declining momentum is a good way both to buy on pullback as a place to where you can start to get in, especially if you identify a level for a pullback and it never quite gets there. Well, then you can just buy when you notice that declining momentum on those candlesticks in front of your level. And of course, it's a great place to take some profit.
Yeah, exactly. I mean, this is what price action is all about, right? It's trading more of the charts. And so I've actually taken off. I only really use ever one indicator, and it's volume weighted average price on the minute charts that I use here to trade throughout the show. But I just cleaned this up right now with SoFi. So if you're going to look here at what we're talking about with SoFi, so forget about the level 2 there. Let's just scroll this out a little bit bigger. This is what we're going to do, false breakouts, right? When you're looking, this is number 2. So we're talking about understanding price action right now, identifying false breakouts, right? And I mean, and right here, how many times, all you really have to do is identify some of these wicks. Like, forget about the pre-market or anything that happens early. Some of those, we're not going to really look at that. Let's look at price action when volume's actually here, so throughout the day, right? So here you go again. This is SoFi, not doing too much in the morning, then starts to go. We talked about declining momentum, okay? Starts to come to the upside. Tick, tick, these are 1-minute charts. So just ticking from 13. I mean, these not even... The point is, these are not big, huge moves, but I think it does show you what we're talking about here. So a move downside, up that 10 cents. Then all of a sudden, it seems like it's breaking 14, right? People getting really excited. It's volume kind of picking up. You see it's starting to be lower, starting to pick up as we start to break. And all of a sudden, you're seeing some high wicks here through 14. So 14.11, 14.12, right? Hits that. then starts to fade right back in, right? Hitting some of these key levels. Then you get right back down here to another key level. Breaks 14, back down here into this cluster. Then starts to ramp up again, right? Then you get more false breakouts, more wicks, all of these wicks here. Then it happens again to the downside. Then you get a real breakdown. Notice when the moves are actually happening to the downside here at SoFi. It's actually breaking and starting to show you some action to the downside. Then you get this bottom wick. So again, talk about price action. Okay, so you get another little bottom blowout right there. You're starting to see some big volume come in here. So volume on these down candles all of a sudden stops right here. So you get the next big wick. Notice the buy volumes much lower than the sell volumes. All of a sudden, that signals a complete turnaround. All green candles from there, right? That bottom wick. Then look what happens again. You get a top wick right here, followed by the biggest green candle volume-wise. So there it goes. Another big break. Okay, here we go. We're going right again to the highs. Nope, that's another false breakout. Ticks up here again, coinciding right back here. And then look what happens. All the way back down to the downside one more time. So that's, again, a good example right here, I believe, of false breakouts happening on SoFi.
All right, so identifying lower volume scenarios coming into key levels of both support and resistance to identify those pivot points or possible pivot points where we could get a reversal in that price action, and then understanding and identifying as well either volume increasing during a breakout or volume decreasing during a breakout that would eventually end up being a false breakout. Going to help you in that case. Let's talk about the next one here, guys. Consolidations. Why agreeance on price, and I mean buyers and sellers agreeing on price, form consolidations and why those are so important.
Right, exactly. So, I mean, I have a perfect example, and I'll take this one as it's right on the board here. And we're going to use Microsoft one more time here because I think it's a great example. You clean up the chart and you don't have to worry about anything else. So all you're really doing is looking at consolidation and make sure it means something. So this consolidation actually goes back to yesterday's open where we opened at 291 and changed 292. So that consolidates with that. Look what happens here today. We know Microsoft's going up. You can see that with the price action. Remember, that's what we're talking about. Just look at the price action off the bottom here. Nothing but love. Kept bouncing off bottoms. Then all of a sudden, we had some price discovery happening between 291 and 292. The winner was not determined until we get a break, right? So right here, that's a 292 break coinciding with yesterday's open as well. So back and forth, back and forth. Look, 291, I mean, we could draw lines. This is 291 right here. So there's 291 almost. I mean, I think it's missed it by a little bit, but that's a 291 bottom there. And just look, back and forth, back and forth. You actually even can consolidate back to 291.20, some consolidations back. And then as soon as we get this break right here of 292, look what happens. Nothing but love to the upside one more time. So there goes Microsoft. We actually wind up catching, just off this trade alone, a $3.50 winner. It does go almost $4 for us in the money. But all this consolidation, as soon as the market decided it wanted to go, so does Microsoft. So you have battles back and forth here, back and forth, long, short, long, short. You don't see any executed trades in here for me until, bang, right to the upside. There goes Microsoft cruising for, you know, like I said, $3 or $4, taking out yesterday's highs, right? And that was sort of where we stopped right there at 294.50 before consolidating one more time. Then you see the price action again on that break. So look at the consolidations, break, consolidations, break. So that's Microsoft in a nutshell. Consolidate here, break up, consolidate, break, a whole bunch of them all the way to the upside. So if you are focused, if you're focused on consolidations and price action and you have a specific direction that you're looking for, you can make money on these coil ups, Brendan.
And finding those consolidations either on higher time frames or on intraday time frames are going to lead to a directional move. So when we have agreements, once those sellers, in that case that Sean was talking about, run out of steam, you see that next leg to the upside. And that is what we are trying to capture. Those are the top 3 secrets, guys, on how to better understand price action. Here's Valeria.
Hey guys, thank you for sharing these trading secrets. Dear viewers, please subscribe to this channel to see more great videos.